We are live from our world headquarters at 731 Lexington Avenue. I'm Matt Miller.
And I'm Kailey Leinz. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, waiting for the merge. Bitcoin is stuck at 20,000, but Ether outperforms as the Ethereum upgrade to proof of stake draws closer. We'll assess the impact with Tiger Cub and former Goldman Sachs trader Dan Morehead.
And from the UK to the US, the future of crypto regulation remains uncertain. We'll survey the landscape with Perianne Boring of the Chamber of Digital Commerce.
And Binance, the world's biggest crypto exchange, makes a bold move to cement its status as the top marketplace for digital assets. We've got details on its stablecoin swap.
All right, so all of that is ahead, but first let's get a snapshot of the market. The best way to do that on the Bloomberg terminal, CRYP Go. That is your function, and what you'll find is that honestly the biggest cryptocurrency, Bitcoin, isn't doing a whole lot of anything today. It's essentially unchanged, trading right now at $19,750 or so, so below that nice round $20,000 figure, which is where it seems like it's been for quite some time now. You're seeing some outperformance from the altcoin. Solana is one of them, up the better part of 5%, and Ether outperforming once again, up 4%. We're trading right around $1,660 as we get closer and closer to the merge, which is expected next week. The latest leg of that, the Bellatrix software upgrade, has activated as of this morning, so that's giving a lift to Ether and actually a lift to Ethereum Classic as well, that kind of throwback offshoot cryptocurrency. It is up about 11% as we await the merge, and we'll have more on that in just a minute, Matt.
Yeah, it's interesting. Ethereum Classic and Ravecoin, they've done better even than Ether ahead of the merge, kind of showing you what the market thinks about proof of stake. We're looking in terms of Bitcoin at big round numbers. Every stop on the way down. It's really interesting that we hover around these levels. We're stuck at 20,000 over the last couple of months, but really in the last week, this is the tightest trading range that we've seen in 2 years. Still, market participants anticipate the broader risk off sentiment in markets to continue to weigh on the asset.
Investors in the crypto space are latching on to the macro narrative.
If we see markets crash again, we're going to see crypto crash along with it.
High correlation with the NASDAQ.
But it's actually even worse than that.
It hasn't demonstrated its utility as an inflation hedge.
As NASDAQ has gone down, Bitcoin and Ethereum, for example, lurch down even further. But then when NASDAQ has its periodic recoveries, they don't recover as strongly.
In and around that $20,000 mark.
Investors have gotten a little bit comfortable around this level.
It is going to be very vulnerable to that hawkishness.
Such risk-on assets now, and this is not a risk-on environment.
It's flushed out a lot of the things that needed to be flushed out from the crypto space anyway.
Joining us now is Dan Morehead. As we said, he's a Tiger Cub, former Goldman trader, now, of course, the CEO at Pantera Capital, a crypto hedge fund. Dan, what do you think about the weight that we've seen on Bitcoin and the crypto space at large? Is it just about the Fed and what's going on in the macro picture?
I think that's a lot of it, and I actually think that's temporary. This might be an out of consensus view, but I think blockchain can easily decouple from this kind of risk-on, risk-off mentality that people have had. And in a year's time, even if the main markets are struggling, bonds, real estate, equities, I can see crypto, marching to its own drummer and hitting all-time highs.
We have seen big leverage in terms of, the open interest in the perpetual swap contracts compared to the amount of Bitcoin out there. It looks like the market's preparing for a lift. What do you see in terms of the price?
Oh, I agree. We've been doing this for 10 years, and we've been through 3 big bear market cycles. And on average, they lasted 220 days, and that's basically what we just had. So I actually think we hit the lows in June that we'll see, and then we're on to the next bull market. And hey, it might be rocky and might take a while to get going, but I think that we're on to the next leg of a rally.
And where will that bring us to, Dan? What's your target for year end and then 5 years out?
Well, yeah, Bitcoin as a proxy for our industry has averaged 2.5x a year for 11 years. So that's always kind of my standard forecast, is that it'll probably keep going at that same growth rate for a while. But it is really important to remember, Bitcoin's no longer everything. There was a time Bitcoin was 100% of the market, and then for a while, Bitcoin and Ethereum were essentially everything. Now there are many, many really important projects, and you've seen Bitcoin, rally a bit, but the real story is projects other than Bitcoin and Ethereum are rallying more.
Well, let's talk about Ethereum, because as Matt and I both mentioned already, we're getting closer and closer to the merge. It seems like there is a lot of hype, a lot of optimism. What is your read on the actual impact it will have?
Yeah, it's been our belief that as soon as they actually set a date for the merge, then Ethereum would outperform, and that's actually happened. And I think once we get through next week and it goes through, and God willing, it does work, it should explode. And so we've been, much more excited about Ethereum in the last month or two than Bitcoin. And you've seen Bitcoin share of the market has drifted down to 38%, and Ethereum's now worth a bit more than half the total market cap of Bitcoin.
The Bellatrix
Yeah.
kicked in today. The Paris upgrade is coming next week. It's like a Bourne novel here. What do you think about the move that we're seeing, though, in Ethereum Classic and Ravecoin? I mean, Ethereum POW seems set to be a big gainer. Are markets going to yearn for the nostalgia of proof of work after the merge?
Oh, I'm a little dubious on that proof of stake is essentially what we use in securities. We all vote proxy, by ownership share. So, I think people will get comfortable with proof of stake. Obviously, Bitcoin is great at what it is, storing a lot of wealth, transferring wealth across borders. But I don't know that you're going to need another proof of stake coin in the future like Ethereum Classic.
Dan, love to get your take on stablecoins in light of recent big, bold move by Binance. They're going to automatically switch, I think, USDC, Pax Dollar, and True USD into their own BUSD stablecoin. Are we setting up for big competition among the exchanges in terms of their stablecoin products?
Oh, definitely. And even with governments, right? Central banks need to be into this because obviously with antiquated systems like FedWire that takes 3 hours, stablecoins are a superior way to get money around the world. So in the future, finance will all use a stable coin or very similar product. So private enterprises like exchanges are going to offer them. Circle and Coinbase's USDC is a good one. And then the federal government and foreign governments are going to get into this.
And do those foreign governments, the CBDCs of the world, coexist alongside the likes of USDC, or does one actually supplant the need for the other?
Yeah.
Oh, I think they'll coexist. There's one that exists already. China already has a functional central bank digital currency. The U.S. is probably 6 or 8 years behind China, so it doesn't exist yet. So it's very theoretical to even talk about how it will coexist with the private ones. And there's definitely a possibility that the private ones have such a long head start over central bank digital currencies that by the time the central banks actually launch theirs, everyone's totally comfortable with using USDC or whatever it is they use.
So what role do stablecoins play in your portfolio? What are you investing in right now?
Yeah, so we invest in some of the companies that produce stablecoins, like we're investors in Coinbase and Circle. But as stablecoins are so stable, they're not good for speculating. So we don't trade them themselves. We do use them for moving money around the world. It's it's way faster than doing SWIFT or any other kind of traditional finance way to move money. So we use stablecoins a lot, but mainly just for moving money around.
Are you hoping for more regulation in this area, Dan? Because it seems to me there's not quite enough transparency. When I see that Tether has, $70 billion of stablecoin issued, I want to know exactly what assets are backing that up.
Yeah, it's a great question. And yeah, I'm very much in favor of sensible regulation. So we want to make sure that no regulation essentially forces legitimate business activities offshore. Because, whether you like blockchain or not, it is going to happen. And so regulators should have an interest in fostering the community within their own country. Like in the United States, it'd be wonderful to see more blockchain still in the U.S. So sensible regulation is great. And then on Tether, if you don't like their level of transparency, buy USDC or some other stablecoin. So investors get to vote with their wallet.
In terms of the blockchain, I've been waiting so long for us to see real government involvement. For example, I would like my driver's license to be on a blockchain or the deed to my house, as New York Mayor Eric Adams has suggested. When do we get there? Are we starting to see that anywhere outside of, El Salvador?
Well, you're seeing it in China, El Salvador, some places like that. But you're right, the promise of blockchain to put, say, all property titles on the blockchain, and then you wouldn't have to pay title insurance every time you refinance your house. That is an unambiguous good for our society, but it takes the government actually putting property titles on the blockchain, and governments are typically the slowest actors in the space. So unfortunately, I think that, that might be like a decade away, but then you even get voting rights and all kinds of other really amazing things once the governments really do engage blockchain. But just the reality is they're a bit slower than private enterprise.
Will they use Ether?
Probably.
Dan, finally, Matt and I were speaking with Glenn Goodman of eToro earlier this morning. We heard from him a little bit at the top of the show there, but he was talking about the corn kid on TikTok. I don't know if you've seen it, but basically this kid loves corn, and he was essentially saying this got everyone thinking about how we don't think enough about how valuable corn is and that prices are going to keep going higher. There's going to be scarcity, just kind of this idea of perpetually higher inflation for things like food and energy. And he ultimately thinks when people look at their savings and inflation, they're going to be driven toward things like gold and Bitcoin. How much does that inflation hedge argument still factor into account for you?
Oh, it's huge. And admittedly, it hasn't worked in the last 6 months. But I really can see a world where I actually think Fed funds are going to 5% and bonds are going to 5%. And so obviously bonds are going to do terribly in price terms. And that probably impacts stocks. That probably impacts real estate. I think the Fed has to keep tightening until they get real estate to stop being a bubble like it is now. So in that environment, anything that's interest rate sensitive or related, can't do well. But, gold, corn, Bitcoin, Ethereum, those things don't have to be connected to interest rates. So I am expecting a decoupling this year.
All right, very interesting stuff, Dan. Thanks so much for joining us. Really appreciate your time this afternoon. Dan Morehead there of Pantera Capital.
All right, well, coming up, we're going to talk more about crypto regulation on both sides of the Atlantic with Perianne Boring, founder and president of the Chamber of Digital Commerce.
And stablecoin competition heats up. We'll talk more about Binance converting USDC into its own stablecoin, BUSD. More on that ahead.
And of course, to access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
Liz Truss, as you say, she has pro-business instinct. And let's not forget, back in 2018, when she made that remark, that was brave, because at the time, senior politicians and senior bankers were generally saying that crypto was a load of rubbish, that it was a criminal's paradise, a nest of vipers. Everybody should stay way away from it. So she was quite brave in being pro-crypto at that time. That makes me think that we've got a prime minister who's going to continue to be pro-crypto.
eToro crypto consultant Glenn Goodman there expressing optimism for the UK's crypto strategy under the new Prime Minister Liz Truss. She doesn't just love cheese and apples, also crypto. He was referencing a 2018 tweet in which Truss said digital assets should be welcomed in a way that doesn't constrain their potential. Very libertarian.
All right, well, let's talk more about this now. Joining us is Perianne Boring, founder and CEO of the Chamber of Digital Commerce, which is a trade association representing the digital asset and blockchain industry. Perianne, great to see you again. As you look across the Atlantic towards the UK, how optimistic are you about Liz Truss and what she may ultimately bring for the crypto space?
Well, unfortunately, she has not shared in-depth perspectives on crypto. We don't really know her positions on specific policy matters related to digital assets. So there is some uncertainty. We do have one tweet from 2018, which she just threw up on the screen, where she said, we should welcome cryptocurrencies in a way that doesn't constrain their potential. And that's definitely a positive statement. But at this time, it's too early to really know what direction she's going to take. There's a lot of major regulatory issues that are outstanding for the digital asset ecosystem. A lot of what we're doing in DC is around educating our public policymakers. So many of the challenges that we have really stem from the lack of understanding of how this technology works and how, in many cases, it does not fit into the traditional regulatory boxes that were built for the traditional financial system like banks and other financial services companies. So we think this is an important time in the UK for the industry to educate the Prime Minister's office about this technology, and we encourage them to engage just like we are doing in Washington, D.C.
Perianne, just as we've been speaking on this show, we've actually seen a rolling over in some digital assets. Bitcoin is now down about 2.5%. We're trading at 19,250 or so. And even Ethereum, which has been outperforming, or Ether rather, ahead of the merge, is now only up about 1%. It was higher by as much as 5% earlier. So interesting price action as we get closer to the merge, which of course will bring the Ethereum network from proof of work to proof of stake, maybe solve some of the environmental equation that regulators sometimes pay attention to. But we know that there's a lot else going on that regulators have taken notice of, including certain stable coins. When we think about the regulation ongoing and those conversations in DC, I know you are involved in some of them. What is the shape looking like from the conversations you have had?
Well, first, I would really challenge the premise that proof of work has an environmental issue. I don't agree with that statement. We very much believe Bitcoin has the potential to help transition society from reliance on greenhouse gases to more reliable energy sources. And we're seeing that transition take place throughout the United States already. And the reason why Ethereum is merging away from proof of work to proof of stake has a lot more to do with how smart contracts platforms operate. So given that, a number of the policy discussions in Washington, D.C. and on Capitol Hill, energy is one piece of that, but you mentioned stable coins. So to give you an update on what's happening there, the House Financial Services Committee is currently working on legislation to bring stable coins under federal regulatory oversight, where either only banks could issue stable coins or non-banks, but under the Federal Reserve's authority. The text of that legislation has not been made available. We have been in conversations with the committee on this bill. There's parts of it that are incredibly promising because having a regulatory path forward could really spur institutional adoption into our industry. But this really needs to be done in a way that is not going to hinder innovation, and a one-size-fits-all approach really is not an appropriate path for such a dynamic space. So that is a huge priority for the committee, and we may see a markup for that this month.
Well, I wonder also how important it is to the Digital Chamber of Commerce to have a standard here. You know, the move that we've seen by Binance now to automatically swap USDC, Pax Dollar, and True USD, three of the leading stablecoins, for its own stablecoin, makes me think that eventually we're going to have, each exchange is going to have its own stablecoin. Each DeFi platform is going to require its own stablecoin. Each, yield generation scheme is going to require its own stablecoin. And then it's just too much. Don't you need, for industry's sake, to have one standard across the board?
Well, that would be a monopoly. And generally, we don't believe a one-size-fits-all approach is appropriate for an innovation economy. As a free market thinker, I think it's important to have options. There will be environments where certain types of stable coins will be more appropriate than others. You mentioned all of the exchanges potentially having their own stable coins. Many of them already do. A lot of the banks are also innovating in this space. I think it's very possible that banks will have their own stable coins. They may call them something different, a tokenized version of digital cash or something along the likes. And eventually they may all trade with each other, and they may all be interoperable with other digital assets like Bitcoin and Ether. But I think it is important that we have diversity so these assets can support many different applications and use cases, especially when we're still in such an early and nascent innovative stage of the ecosystem.
I mean, they're already just like 1,000 different converters for one kind of charger, the US dollar, right? Why don't we just have the central bank issue a stable coin so that we can, and when they do, because they will, right, get rid of all of these others?
They may. That decision has not been made yet. Many members of Congress have said it's really in Congress's authority to give the Fed the jurisdiction to be able to issue a central bank digital currency, which they don't have at this time. So there's still some legal pathways that have to be addressed before we can even discuss a CBDC being issued from the U.S. government. But again, having a one-size-fits-all approach, I think is not helpful in an innovation space. And there are a lot of critics against having a U.S. CBDC. People are concerned about privacy. You look at what's happening in China, what they built with the digital yuan. This is a surveillance system, like something we've never seen before. So, I think we need to proceed with caution and make sure that our American principles are baked into systems like this that protect our privacy and protect our security. And what the private sector has built in the stablecoin space is light years ahead anything any government has put forward to date.
All right, we have to leave it there, but thank you so much for joining us again, Perianne Boring, founder and CEO of the Chamber of Digital Commerce. And be sure to check out our Bloomberg Crypto podcast, which dives deeper than the daily market buzz to explore how this asset class is changing the way we live. Look for that every week through the Bloomberg Professional app, iHeartRadio, or wherever you get your podcasts. This is Bloomberg.
This is Bloomberg Crypto. I'm Matt Miller with Kailey Leinz.
Now to some crypto stories that caught our attention this week. El Salvador's president announced in November that Bitcoin would revolutionize his country, becoming the first nation to adopt the cryptocurrency as legal tender. At the same time, the digital token had just notched new all-time highs. Now the government is sitting on losses after purchasing the token in the run-up to its announcement and continuing to add to stockpiles.
FTX CEO Sam Bankman-Fried says his efforts to bail out companies during the crypto market downturn have had mixed results. The 30-year-old billionaire engineered deals worth about $1 billion to backstop struggling companies after cryptocurrency prices declined sharply in the spring and summer. He highlighted June's $485 million loan to crypto lender Voyager as one which didn't meet his expectations.
And finally, a story we've mentioned a few times. Binance, the largest crypto exchange by volume, will start converting any existing user balances and new deposits of USD coin into the company's own stablecoin. In a statement released today, the company says Pax Dollar and True USD will also be converted. The transition is scheduled to begin on September 29th. So, Matt, I get that all of it in theory is dollar for dollar. It's pegged to the US dollar, and yet it's kind of a big move from Binance to do that.
Absolutely. I think this is one of the most fascinating stories. And like I said, it's just like having 1,000 different adapters for the same kind of plug.
Yeah.
But each company wants to have its own adapter. And I just think it's going to end up very interesting.
Yep, it's something we'll continue to follow. So join us again next week, Tuesdays at 1 p.m. right here on Bloomberg.